May profits be upon you. Shout out to my guy, Alex Rodriguez, A-Rod, for making a request that I've been considering. Uh, and he just made me brought it to front of mind. And I'm going to take a look at it now. We're going to look at platinum. All right. We're going to look at platinum. He requested uh, more metals analysis. And I was like, you know what? I need to do more metals. So Uh, leave a comment in the comment section if you want to see more metals. If you like that I added platinum to the mix of the metals that I do cover, and just leave a message in the comment section. Now we're going to take a look at the weekly, the weekly time frame, and what I want you to see is you can see how price uh, came down, made this low, went back into this consolidative area here. All right, let me start using the drawing tool like a professional. All right, you can see this consolidation area. All right, price came down, swept all of these lows, took that liquidity, and then pushed back into the consolidation. And that's usually for me, that's a sign that price wants to turn bullish. We come back down to the bottom, we go back up to the top, we come back down to the bottom, and then we peak above. All right. Now, a lot of people are going to call this a fake out. For me, not so it's not so much a fake out. All right, because what I like to call it is a breakout. All right, and after price consolidates, all right, there's that accumulation. All right, you have the manipulation, and then you have the distribution, right? But that's not. I don't see this as that. I do not. I see this as a breakout that is followed. When I see a breakout like so of a consolidated area, I'm looking for price to pull back somewhere within this leg of structure. This I look at it as one structure, but you can look at it from the point of which the impulse started. All right, I look at the swing low. I look at swing low to swing high, and when I see that a breakout where it clearly trades through, not just wicks through, but trades through the highs. I'm looking for a price to come back somewhere within this leg of structure from this high to this low, this trading range. I'm looking for it to go from premium to discount. That's you chop it in half. This is the equilibrium, and I'm looking for price to come back somewhere in this lower half of the trading range, the discount. That's where you want to take your longs from. You want to take your shorts from premium. You want to take your longs from discount, and prices come back to that. All right. I look at this as a strong low. Why? Because it created a new high. I'm looking for that pullback into this, and I'm looking for uh, the point where price signals that the pullback is over. And this candle here is where you can see that uh, we have a breakout to the upside. I'm looking for that break of structure. That's why I have it there as a break of structure here. But I just right now you'll see it in the next slide. Uh, I like the fact that price traded through this consolidation and peaked out at top, just like here, just like in the bigger version of what just happened. Da 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 da. Boom. Right. Da 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 da. Boom. We have a smaller version of it. That is a break of structure. That for me is signifies a shift in the market. All right. Some people might want to call it a CSID. A change in the state of delivery. You can do all of that. All right. But what it signifies to me at the end of the day is that we respected the low. All right. And price is demonstrating an intent to go higher. That's the bottom line. Now, if we go down to actually, we're looking at the weekly, right? If we go down to the daily, all right, I'll make sure I get that. Here's that break of market structure there. You can draw this line. Sorry. You can draw this line all the way over like so, right? We have that structure point. We break structure to the downside. We pull back into this trading range, this uh, leg of this bearish leg of structure. And you, what was I looking for? We have put it in half. We have discount. We have um, premium. It came back to premium, and you want to take shorts from there. It set up a short, boom, and we broke structure once again. We're just looking at this in the reverse. All right, you're going to see the market maker sell model here, and the beginnings of the market maker buy model on this side. All right, with this point being uh, the line of demarcation, right? You'll see that things changed here, and with this impulsive move, I'm looking for a retracement. Now, here's the deal here. You see this, watch the trading range here from this low. Let me turn this back on. From this low to this high, right? You can see that price has only moved 38%. All right, 38% here. Boom. All right. A lot of times that's where uh if the impulse is strong enough, price is not going to retrace 50% or better to the golden ratios down here, the OTE levels, the optimal trade entry levels. Sometimes the impulse is going to be too great, and it'll stop at 38 and continue higher. All right, we have to keep that in mind. But I'm looking at that almost to the pip, finding support here at the 38. I got to ask myself, what's the likelihood that price comes down further? Well, this is where uh, I look and lean on the fair value gaps to give me some guidance. Now, if we go back to the weekly, I want to point something out. The weekly has created this fair value gap. From that high to that low is a bullish fair value gap. I like to see this when after price trades through a high like this, like that. All right. When it trades through, not wicks through, but trades through with a candle body close above. All right. I'd like to see that because I know that the next candle will likely tap into this in order to go higher. You understand? So this is a bullish setup for me. The probabilities lean towards price moving higher, right? I have that line marked out. I have that fair value gap marked out. But on the daily, I want to look for overlapping daily fair value gaps within the weekly for fair value gap, and we have one. You see, from this high to that low, you see I have it marked here as a daily fair value gap, and price is in that right now. So, on a daily basis, for my daily bias, it is bullish because we are sitting in a bullish fair value gap until price comes down and closes below this fair value gap. That's when I say that this is eliminated as invalidated. All right, but right now, no, I'm not doing that. I'm saying it's very valid, and it overlaps the weekly fair value gap. This area where it overlaps, that's where I'm looking at that there is potential that price could make it down there and find its footing and come up if it doesn't do it from here. But I kind of lean towards where it's at right now. I got a couple of reasons why. I'm thinking that from here it won't take this low. I'm thinking we just formed a fractal low here. I like to see fractals because it's an indication that it's in this case it's a bullish. It's an indication that signals that price will probably go higher from here once it makes a swing low. You understand? All right, so I'm looking for price to continue higher, but that's what I'm leaning towards. I'm just talking about probabilities here, right? But just like I did with the weekly fair value gap, and I'm looking for an overlapping daily fair value gap, and that for confluence, I also want you to take note of something else. Let me go to the 4 hour. in that daily fair value gap. All right, let's make this one go away for a second. How can I do that? How can I do it? How can I do it? Hide. Thank you. All right. I don't like a whole lot of mess on my screens. Uh, what I want you to see is there's a 4 hour, because we're on the 4 hour time frame right now. All right. There's a 4 hour fair value gap nested within the daily fair value gap, which overlaps the weekly fair value gap. You get what I'm saying here? I'm looking for confluences. So you can see from this high here to that low here, we have a 4 hour fair value gap. All right. I like to see that. I like to think that should the 4 hour fair value gap hold, we shall continue higher from here. Okay. Why did it give me that big thick one? I don't know. All right. I missed. All right. I'm looking for, wow, what is that about? I'm hitting this one. I don't get that. All right. I'm looking for this. Okay. But I also want to point out, and I'm not this kind of trader. All right. I'm not a trend line trader per se, because I don't look at trend lines the same way as retail traders do, and I'm a retail trader, but traditional trading does, what I mean? Because it's a very subjective thing. What I look at is uh, I look at these lines as a liquidity line where market makers will dip below this line because they know there are people taking trades based on this line. Oh, if it comes to this line, I'm going to put a buy order here, put my sell stop here, my buy stop here, my buy stop here, my buy stop here. Instead of putting it on the line, I'm going to put it right below it. And what market makers will do is dip below that line. I didn't mean to do that. Dip below dip below this line, and then go back up. All right, so they can clear them out, raid the stop losses, and raid that liquidity, and move on higher. But what I got here is just the trend line that says, "Hey, man, this been pretty on point." I'm just bringing your notice to that. It's not something I'm just gonna sit back and just totally ignore. It's been pretty reliable as a diagonal support area, and it happens to cross at the exact point where this 4 hour um, fair value gap is. Okay, break up a bullish breaker structure. You're looking for price to come back within this leg of structure to find to retrace to and continue higher from. Why? Because we are looking for, very simply put, a higher high relative to the breakout area, a higher high, a higher low, and a higher high. That's it. We're just looking for the trend to start, and it's going to start. The breakout that I showed you on the daily, on the weekly, that last week was the week before last was a bullish breakout. It was the end of a retracement, and this signals that price wants to go higher. So we have a trend line going up. We have a daily fair value gap here, which overlaps the. Sorry, can I get it? Can I get it? There you go. Which overlaps the what is this? Where's my? There it is. Which overlaps the weekly fair value gap here, right? And I'm just looking at all these confluences here that say it's going to go up. Okay, this is the line of demarcation for this trading range. This is 50% of this trading range. Should price, now this is the other side. All right, I'm looking for price to continue higher from here. That's what I'm looking for. All right, I'm not going to jump ahead of it. But also, I want you to know that if we go down from from premium to discount, all right, and price finds its way down here, I'm looking at this area right here. This is where the daily and the weekly fair value gaps overlap. We have some sell to buy wicks here. All right, and this is where these two. This is where at the 50% mark of the weekly fair value gap. Let me get that. This is where the 50% of this fair value gap here on the weekly, what we call the consummate encroachment, is also aligned with the 50% mark of the trading range. This is a high probability area where I would be looking for price to come and tap if it does go past the fractal low. All right, where I would be looking for buys. But in any case, I am looking for buys only in this market. I hope you get that bottom line. So we have two areas. Look at the current levels, all right, which hit that trend line. Also, look at the area where the fair value gap for the daily and the weekly overlap, and the halfway mark of the weekly fair value gap here, all right, which is aligned with 50% of this trading range, all right. These are going to be, when you take your longs from here, these are higher probability, and when you're taking them from the discount area, all right. Premium area is less so, but you see the confluences. So I would go to the lower time frames, the, the 4 hour and whatnot, and look for valid buy setups along those lines. Now, I'm going to show you something too before I let you go. I'm going to show you something. Let me show you something. Hold on. All right. Where's yesterday's candle? I want you to see that we are in OTE levels. Look at this. Right here. Here. All right. I want to go back to the daily. Let me see something here. I'm in the wrong spot. All right. Boom. Boom. Right. From this trading range. All right. From this bullish candle to the pullback. We have a pullback. I want to see, and I already showed you, I want to see where it ends, because those fib levels are real. And look where it ended, right around the 618. All right. From the bottom here, from the swing low to this high is our dealing range. Price pulled back to the OTE levels, 618. This is the golden ratio, folks, of the Fibonacci retracement. And this is an excellent area which happens to cross over at that trend line within this 4 hour, this daily fair value gap, within this 4 hour bullish fair value gap that is nested within the daily. They all come together here. That's why I am looking and watching for a move to the upside. All right. So I'm looking for that move to happen this week. Should price take out this low, as soon as it takes out that low, as soon as it comes past this line at 966.8, right here. As soon as it comes past that line, if it should come down there, you start looking for your buy setups. Period. Start looking for your buy setups. All right. So that's the contingency. That's the just in case. All right. So that's it. I hope all these different things on my screen are not driving you crazy, because right now they won't disappear, and I don't understand why. All right. I really don't get there. Now they're starting to disappear. I don't understand what's going on here. Because I moved things. That's what it was. All right. So, yeah, that's it. I'm hoping that you enjoyed this video. If you did, give a like. All right. Make sure you subscribe so you can catch my updates, because I'll put the updates in the comment section of this video. So just look below this